Welcome back to the channel. On this episode, I'd like us to take a critical look at Netflix, ticker NFLX. Netflix recently declared their earnings and the price plummeted. Netflix has dropped about 50% from the 52 weeks high, even more. Netflix has been in the news for different information the last 48 hours, or in fact, the last 1 week. Netflix, the earnings was not as bad as, the earnings was not actually bad. I think the only setback is the numbers of subscribers. It was not as reached the estimate that was forecasted. However, Netflix has been in the news for other information which might give you a tip ahead of what the position of Netflix as of today. As I said, it has dropped about 50%. Sometimes stock price is not actually a reflection of company. Sometimes Mr. Price overreacts to the market. Sometimes you need to understand the company. You need to know the company and compare the company to the stock price. In most cases, the price might be doing something different from what the company is actually doing. This is why it is important you do your valuation. Now let's look at information on Netflix. Netflix PE ratio is actually 34. Maybe on the high side, but for the industry, it is 34. The market cap is about 170 billion for Netflix, and the price as at close of trading on Friday is $384. That's about 45% down from the recent high. Now, you need to understand stock price sometimes is not reflecting the value of a company. In the last 48 hours, a lot of investors, a lot of investment companies, fund managers, and super investors have bought the dip on Netflix. They've added to their position. If you go on the news, you will see someone bought about 300 million, I don't want to mention names, 300 million worth of Netflix shares. Different people are buying the dip for Netflix. This is because I'm sure they have done the evaluation to see that the price, the fall in the price is overreaction, but it gives opportunity for people who wants to acquire Netflix shares. This is why sometimes it's always good to have cash on a sideline. In fact, it's always good to have cash on the sideline so you can buy the dip. For the Netflix, I will also be adding to my position on Netflix. We will add Netflix to our position on our funds. We have done our valuation and we think that the price is at a reasonable discount. It's at intrinsic value. The price is good to our own valuation. You need to do your own valuation. Let's have a look at the chart to see where the price is. Let's see what the price action is going to tell us, whether we should expect more drop in price or whether we are seeing an uptrend to begin on the stock. So we are looking at Netflix. Netflix current price after hours is 387.65. It closes at 384.36 as at close of business on January 28. Netflix 65-day average volume is 5.46 million. Market value as a close of trade 170.6 4 billion. Shares outstanding 443.96 million. The PE ratio for Netflix is 34. Not paying dividend at the moment. The earnings per share is $11.24. Um, Netflix insists operate as a streaming entertainment services company. The firm provides subscription service stream movies and television episode over the internet, and we all know what Netflix does anyway, so you can read more. Now, let's look at the pairs in this group, Apple, Water Disney, Comcast, Chartered Communication, and more. Yeah, you can see. Let's look at. There are a lot of information you can get. Fundamental information on Netflix. You can go onto the news. You can read. We will be using a different chart to see what we can get from the price action. But first, let's look at um, other um, company profile information if you can get any. Yeah. Let's go to the financial details, balance sheet, income statement, and cash flow. Now we can see just a quick one. This chart is actually it's okay. It's good. I can see where Netflix is going, but however, I think on the more we will be able to drill down candlestick to get price action to see the direction, whether it was trending down or up. Obviously, Netflix was down and it's about to start going back up, as you can see. But on that chart, we will see better. So let's look at the financials. The income, Netflix has just started making money about 2 years ago or so, or last revenue is not a company that is really making money, but you see that 2020 they made 25 billion, 2021 29.7 billion. Um, the issue was the subscription, the forecasted number for subscription was not met. So we can say um, on the balance sheet, let's go and look at the total liabilities. Yeah, this industry, I mean, hoeing is normal. Debt is normal. It's just not to be excessive. Total liability as of 2020, end of 2021 is 28.74 billion, which is more or less the same. The chart, I mean, the bar chart shows that it's not significant difference. Let's look at the cash flow. The cash flow, total free cash flow. Let's look at that. The total free cash flow as at 2021, this last earnings that was declared, it's negative. It's negative. Yeah, they're in debt. Yeah. Okay. So, I mean, owing is not bad. It's just that um, not to be excessive, and I don't think this is excessive. They don't have free cash like that, so they're limited. However, I can tell you that the last 48 hours to 1 week or so, a lot of investors have bought this deep. Let's go on that Momo price action to see why they are buying the Netflix deep. We are looking at Netflix on a daily chart. Netflix is trading below 200-day moving average, 50-day moving average, and 20-day moving average. Netflix is on a downward trend. However, Netflix came down as low as 353, back up at 387. Some investors have bought deep, a lot of it anyway. There was a gap down. Yeah. For one of my strategy, this is not for everyone. I'm just saying. I like when stocks gap down. If you are familiar with trading and investing on such on price action and all that, there will be likely a gap up or a run up to cover this gap back. This gap has to be covered. Now, let me draw a support line we can see here, which which is now going to be a resistance. There's also a support line here, and that is where Netflix is at the moment. Okay, I'm going to have to leave this as well. I'm going to have to, okay, yeah. Netflix is here. What we can also see here again is obviously Netflix is trending down. Okay, on a weekly, let's have a look at the weekly chart. On a weekly chart, Netflix is below 200-day moving average. Netflix has actually dropped. Let's confirm that drop from the recent 52-week high. It has dropped 44 percent. Netflix has dropped 44% from the recent high, and the recent high was 700. Now let's look at, let's draw the support line. Okay, there's a resistance here which was broken. Definitely, Netflix is on a downward trend. This candle that we can see on a weekly trend, this looks like a reversal. They call it morning star, a reversal candle. This is a reversal signal. So Netflix should, as expected, will be going up from here. That is what is expected. You can see aftermarket is already 380 at 387, while it closes at 384. Now, what we can say again is before now, Netflix actually had a good run up. Let me draw this trend line here. Let me draw this trend line here. Yeah. Then he actually consolidated for a while before this run up again. And then the correction, the drop, which you can say correction plus the earnings that wasn't fantastic, and the main thing was the subscription, the estimated forecast of subscription was not met, and Netflix was greatly punished. However, it's an opportunity for you to buy the dip. It's an opportunity for those who have not bought Netflix before. You can now buy it at the value. If you need to do your valuation, carry out your own, use your own metric of valuation, then you will see that where Netflix is at present might just be a good value. For us at Elite Pro, we have done our valuation. We have we are adding more to our position on Netflix. My personal portfolio, I'm adding more as well because I have done my own valuation and I believe that this is at intrinsic value, the good value for Netflix to acquire Netflix. We have seen the fundamentals, we have seen the financial statement, we have seen that it's not this the fall was overreaction. Whatever it is, overreaction or downfall, it is an opportunity for you to buy the dip, and a lot of investors have bought the dip. Let's go back to daily chart on Netflix. So this is the daily chart. As I said, this gap up has to be covered. So meaning that there will be a good run up to about 500 or 512. I'm not saying automatically, but for as long as I've experienced trading and investing, this happens. It might not happen immediately,
this is definitely going to happen.
We have seen the chart, we have seen the price action, we have seen that Netflix in the recent correction lost about 45% of its price, which obviously affected its market cap as well. It has reduced and all that. However, this is for if you have not had Netflix in your portfolio before, this might be a good chance for you. Do your valuation, check to see if it's suitable for your portfolio. As I said earlier, we will be adding more to our Netflix position. We like Netflix. We think where the price is at present is a reflection of its value. So we will be adding more on our position for Netflix. Thank you for watching this channel. Stay tuned with us. Thank you for liking our videos. We will continue to analyze, give content that will give value to your time. Thank you, and please like and share.